Hello everyone. Welcome once again to the weekly review. So I think we were running the weekly update. So it's been a pretty crazy run, I would say, in the markets, as we all know. It has been, I would say, the as we have been discussing few times already in like the last few weeks, that one of this rally itself, I think, surprised almost everybody, especially because how fragile it is, like in terms of the breadth. Like, if you see, there are a lot of it's primarily being run by semiconductor. Of course, there are a lot of catch-ups happening as we saw the rally maturing. And today, let's review, have a quick look of what's going on. As we also updated in our the weekly short, like and the video which we were reviewing before the call started, that there was a big event today in terms of OPEX. We had pretty much a volatile day because of the options expiry, which is the monthly option expiry, which happened after a huge run up. So you need to understand what happens is, as we go into kind of a month to month rollovers, there is usually a lot of stocks which are like, there is a lot more liquidity into the monthly options. Of course, the we all know about the zero DTE, which is the same day options, which create almost daily volatility is increasing. Some of the, like, the amount of exposures dealer have is beyond imagination in terms of the size right now. As we have been talking about this over and over again in various forums, this has been turning out to be one of the most unprecedented extreme, I would say. Having said that, what is really happening? So this rally is, while it is kind of a euphoria around AI, there's also, when we are going to look through the charts and so on, there is a lot of issues in terms of the underlying of the market. So let's go through that one by one, because that is, I think, it's better discussed with the charts. So I'm going to start looking at that. But let's first quickly go into sharing my screen. I can also continue discussing. And as usual, if you are watching live, you on the YouTube, you can always put your comments in the questions. We can take if we time permits. Try to keep it short these days, just to make sure that it is covering the key points. So I'm going to share the screen shortly, and we can start talking about that. And as I said, right, the key things to watch out, I would say, is beyond just what is happening with the uh, in terms of the index. I think what people are also realizing is the underlying structure which we discussed, right? In terms of the yields going up, the oil prices, like, which was the barometer for a long time before market started ignoring it. I think that totally turned the game, where we say that now it doesn't matter if the oil is high, it doesn't matter the inflation numbers are high and market is still going up. So let's try to understand that, and then we can grow from there. So let me go back to the screen. I hope it is visible. Yeah. So this is the screen we are looking at, the SPX. So this is the rally. I think, let me go to the little bigger perspective. So as you can see, it's almost exponential. And of course, today looks like a big red candle. But if you see, it's basically not even gone down to 2 days ago levels in terms of the lows. And as we discussed, the volatility comes because of the OPEX. I think that's where a lot of these, some of these additional panic, or what I would say is kind of extra intraday volatility was there. Okay, so what are we talking about? I think I'm not going to spend too much time on the index chart, because I think everybody knows we are in unprecedented new highs every day kind of a situation. So what are the risk factors in the current rally? Is very clear that as if you remember, we used to talk about this chart where we used to say how the yields have been going down. The Trump administration had taken on themselves to bring the 10-year yield down as their benchmark. Looks like they lost control of it, of course, because of Iran war. So if you see, Iran war totally flipped the game. It broke through almost all downtrends, and now we are quoting at some historic levels, which is threatening some of the peak yield time frame, which was actually considered pretty big factor into recessions and so on. So this is the, I would say, the contradiction in the market right now, where we are saying on one hand we are seeing the yields are spiking, inflation is going up, as we also saw in our update on a weekly on the weekly video, and while the volatility and the fear is non-existent, it's almost like quoting at low levels. And so this is where I think the market is kind of in a pretty much unprecedented, uncharted territory. So what we call it as a very fragile, very overconfident market. And having said that, buying is not stopping. The reason being very simple, that there is a lot of euphoria around AI, but more importantly, it's being managed very well. One thing why I think the market is ignoring the yields, because there's a lot of money being added. The treasury has been buying a lot recently. So basically, the administration is managing this market despite the negative news on yields and oil prices and CPI and PPI. So that is what is, I think, one of the key factor here, which is, if you see, there is a lot of money supply increase. Now, today, one big thing which also changed is the dollar index, because now market is not only worried about the yields, but also after the war's confirmation, and somehow, even though he was a Trump pick, people are now totally turned around, and based on his testimonies and so on, that he's going to be very hawkish Fed governor. We have always maintained that it doesn't matter, because it's a multiple. Even if he wants to vote for a rate cut, rest of the Fed governors have already started talking about rate hikes, and he's just one of the votes. So irrespective of that, so whether it's wash effect or whether it is market realizing that their rate cuts are totally out of the window, some of the analysts are now talking about rate hikes. And there's a 40% probability of a rate hike in this year because of the consistent inflation. So what that meant is the dollar index started going up because we were in a rate cut environment, and suddenly we are now talking about higher yields, and usually dollar reacts positively to it. And because of that, what happened is the gold and silver took a big dump, especially silver. And I think same thing with Bitcoin. So if we talk about what is happening here, even though Bitcoin has been in the, I think, one of the most consistent performers across, even when the market was dropping in the early part of the war, it did not drop beyond the previous low. It was in a consistent uptrend. I think this is the first time it is showing signs of, a stress, and especially the concerning thing on Bitcoin is that it has failed to cross the 200 moving average. So this is definitely an early sign of, somewhere market is worried, or maybe it's a forgotten asset, because of course the Bitcoin has been in a more stable uptrend. It's way less volatile. And I think gold and silver are right now were taking a lot of attention. And I think though silver really took a big dump today. So I would say the precious metal and all these are going to have direct impact of 10-year, while equity is escaping it because of the narrow rally. And the narrow rally, as we discussed previously, a lot to do with semiconductor. If you look at this run up, it is, I would say, unprecedented in many, many proportions, not just because this is not your GME or Avis. These are huge market cap stocks. Even though they were used to be small, like if we talk about AMDs of the world, Intel of the world, MU of the world, and the re-rating which they saw, it's not that people did not know the importance of the memory. It's also about chasing. People are chasing it. So there is a lot of uncertainty around whether they are topping out or whether this is just a consolidation. And I think that is going to be key in terms of the retail sentiment, because retail has been chasing this rally. So I think we are going to watch how next week evolves, because remember, why we again go back to the monthly expiry which happened today, it was critical that the trends can change around it, not necessarily guaranteed, but basically what it means is there's a lot of dealer gamma which was pushing this market as the retail was chasing the, as we call it, the Vega chasing, which is basically you are chasing out of the money calls and options in an environment where the volumes of options are really, really high. The dealers have the same amount of money and they're to keep chasing the price behind the retail. And once this falls off, a little bit of that, now they may readjust based the risks if the retail participation starts dropping. So this is kind of an inflection point today, and we are watching very closely how this evolves and how the market behaves in the next few days. So today, I would say, uh, now if we talk about overall, today was not a very bad day, even though market was down by a big margin because of the correction, I would say. But if you look at semiconductor itself, the SMH sector or any of these stocks, they even the Tuesday correction lows were way lower. So market found support at much higher level. So I would not pay much attention to today's drop as a warning sign yet. But if the follow-up action is negative, the market is very fragile downstream. Market can take a bigger correction. On the other hand, as I said, uh, because today was not as bad as even the Tuesday morning when we saw a much bigger drop, whether it is like if you look at S&P 500, whether you look at NASDAQ. So if you see, most of them made a kind of a higher low through the week, even after the drop today. So technically, I don't think we are at any point where we are seeing major panic yet. And also it's visible in the VIX. Even though it went up a little bit, not enough. Other thing is that previously we were also tracking this, like after this crazy one, was a expectation of some kind of resistance in this zone, which was pretty much a long-term trend. Usually, if you see previously also, if you draw this same line down, previously it had gone up and then broke back below it, and that usually means that it can fail. So it's not always maintained these trends. Sometimes they overshoot. So right now we're in an overshoot mode. So people are watching this line very carefully, whether now that the new line, new trends is broken already, are we again going to have like previous situation where we overshot and came back below it? So a lot of things to watch out in next week. Very similar, I would say, in SPY and so on, where we are saying that these SPY actually has not broken out. That's the interesting part. Is it's not as much in a kind of a zone. The QQQ and of the world, and I think the Nasdaq of the world are kind of in a breakout move. So this is the status, I would say, in terms of the summary of this is we are still in an uptrend on a daily basis. Market is very fragile, as we have seen in many days, like whether it's Tuesday, whether it's today's correction. But I don't think we have broken any levels. And we are watching very carefully of what happens with semiconductor, which is still the leaders. We are seeing rotation. One more thing to discuss is that we saw today that again the Apple and Microsoft of the world saw the rotation. We saw, I think Tesla has been breaking out, and because of the rotation in recent times, it also started attracting interest. So there are a lot of stocks which have actually, like if you look at Amazons and Google of the world, they are kind of sitting at places where, yeah, some of them have run up and they are kind of waiting. They are not able to lead anymore. And if so, there are two possibilities. If these have other mega caps which have taken a breather where they are kind of release some steam, for example, like whether Amazons and Googles of the world, they can start rallying again. Microsoft is already a good candidate for reversal. So these are heavyweights which can keep the rally. So I would say the rotation and so on. While definitely one has to be cautious on semiconductor. While like Nvidia caught up, this was again one of the rotation trades. If you see, it had lagged behind in terms of the size of the rally. Avago has been, I think, consolidating for some time now. If you see some of these overbought conditions have been resolved. So there's a lot of, I would say, rotation happening, which is creating these kind of a release of steam, I would call it. So markets definitely are different every day. And that is what I would say, just watch out, be careful on things which have run up too much. Staying hedged is always recommended in this market, as well as I would say, watch out for the mega trends. Like watch out for when does the kind of a bubble kind of conditions resolve in some of these sectors like semiconductor and so on. So that's where we are. I would say it's a pretty much a market which is, I would say, never seen before in terms of the extremes. And we have been talking about it for 2 to 3 weeks. As we said that we were in 100th percentile in almost a month ago in terms of the run up. And then we kept on going into more and more extremes. So just it's very easy to get caught up in the kind of both narratives, whether it is, that this market has to go down or it's too much of a bubble, or to say that, oh, we are still early, because depending on what your mental model is in terms of how far this AI rally can go, and whether you believe in it. Right now, it's not about valuation. It's very heavily about money flow into certain sectors. So I would say just be cautious about your plans in terms of how you choose and invest. So that's all I can say in terms of the big picture view. And as I said, I think the underlying fragility of the market is also getting exacerbated with, like, the kind of yields, like, yields are going up. It's a huge red flag. And but on the other hand, market is also creating a scenario where we can say that what if we go back into high inflation, high interest rate, and high growth environment because of AI? And there are always justification at a macro level to keep the rally going, but remember that the underlying supports can vanish very fast when you are built on a very thin and very fast rally. And you have to prepare your portfolios for that. So I think we'll just call it, we'll call it a day on this one, and we say that we will come back again, review, especially as I said, critical week next week, where after the OPEX, where does the dealer positioning start? We are watching very carefully, being into the options market. We are also watching very carefully the trends in semiconductor, which is actually the flagship sector. Oil, of course, it will be on the watch. Iran war over the weekend, any news can trigger. The news is, as we said, when you have fragile markets, when you've already gone up so much, and news can trigger a retail confidence dent or something. And right now, I think there will be, the speed can accelerate in either direction, because we are in a breakout conditions, which can either a failed breakout, or we can continue going up, because when we are in a blue sky zone, when we are making new all-time highs, there are no real, there is no supply coming in at top level in many of these stocks. So that's what we have seen with semiconductor sector. So either the other sectors catch up or other stocks catch up, or we will see some kind of a big correction in this sector. And so that is, I think the next week will tell a lot about it, and we will watch out how this goes. So thanks again, everybody. So I think this was, our quick summary on the macro view of where we are, and looking forward to more data coming in next week and how market reacts to that. Have a great weekend. Talk to you soon again.